All right. Hello, everybody. Welcome to the closing playbook for Monday, September 22nd, 2025. We're going to get started with a little pre show content and then we will get into the real deal. For those of you who are asking about overnight options, I have not seen it posted yet, so you haven't missed anything that is out there as far as I know. I believe Nathan is hard at work on it right now. All right. For those of you just joining us, or for those of you joining us for the first time, an extra special welcome to you to your first closing playbook. This is a free daily webinar that we do. It's hosted by Graham Linman and Nathan Tucci and myself, David Mound. I'm just a moderator here. Graham and Nate are the pros. And we try to do a fast paced trading session with a little bit of education and occasionally some recap of the day or the week and some planning for tomorrow. We only have about a half hour left in the trading day when we do closing playbook. So it's usually pretty fast paced. If you can't keep up, just kind of watch, learn what you can, start, with whatever programs you're in, whatever training you have access to, and take your time, do all of that at your own pace. This is kind of faster paced. In the morning, you can come to a 10 a.m. opening playbook, which is a little bit more educational and a little slower paced. Regarding the platform, for those of you who aren't familiar with it, you can get a little bit more room on the screen for the presentation by clicking that hamburger button at the top, those three horizontal lines. That will shrink the green column on the left, which really doesn't do anything but look pretty. And then in the bottom left corner is a speaker icon. That's your mute and your unmute button. So you can use that if you need to mute us but don't want to stop the presentation. In the bottom right corner are two buttons to control the size of the presentation. The double arrow icon will make it full screen. That'll give you the best view, but will temporarily hide the announcements and the chat, although you can pop the chat out into its own window with the arrow in the top right of the chat. Sorry, I skipped one. So the button to the left of that is a picture in a picture button, and that will shrink the presentation down into a small floating window. That way, if you're only on one screen, you can do something else in another window behind the presentation without losing the presentation. However, picture in a picture is both browser and device dependent. So depending upon the browser you're using and what type of device you're on, you may or may not have that button available to you. If you'd like to send a private message or a direct message, whichever you'd like to call it, to any of the hosts, Nathan, Graham, or me, you can click on any of our messages in the group chat and then click on that double speech bubble icon to direct message us. You can also click on the little people icon in the top right corner of the chat window, and you can direct message us from there as well. That way, only the host that you're messaging will see your question or your private contact information or whatever it is you want to convey without the whole world seeing it. We have a replay page set up so that you can see past sessions of opening and closing playbook, as well as Lance Ippolito on the afternoon Stonkomania. Those are all in the same place at the URL that you see on your screen right now. You can go there within an hour or two of each session. We have the replay loaded up. So, for example, right now you could see this morning's opening playbook, but Lance's afternoon session isn't quite uploaded yet. So it's about an hour or two behind. If you scroll down below the presentation, you'll see in the announcements section, there are a bunch of helpful links. Just want to go through a couple of them real quickly. The first one is the link that you should be using to get to opening and closing playbook. The second one is the link I just previewed with the recent replays. The third one is our YouTube link with older replays back before mid-August. And then want to draw special attention to Nathan and Graham's Telegram channels. You should sign up for those. Those are free. That's the best way to keep in touch with those guys and with what's happening here. And the $1 VIP playbook membership is the best dollar you'll ever spend. That gets you into our members area that correlates to what we do here in opening and closing playbooks and has training videos, online calculators, helpful links, all kinds of stuff that our members use on a very frequent basis. I really highly recommend everybody drop the whopping dollar on that for lifetime access to those resources and we continue to add to those resources as well. So definitely check that out. Coming up today in Closing Playbook, we're going to get some a brief gap training and then some live gap trades. And then we will have an opportunity for those who aren't in it to get into Graham's Perfect Income Trade Alerts program. So with that, let me bring the guys onto the stage if they're ready. And if not, let's see what's going on in the chat.
Oh, I'm ready. I just didn't hit the stage button. Hello.
How you doing, Nathan?
Hey, I'm good. I'm actually doing something kind of exciting right now. If you guys are in my HQ, I'm going to post something here. Doing my first O&O trade on SPX.
Oh, wow.
Price did pop a little in real.
I like SPX.
Yeah, people already asking before I started talking about O&O where the trade is today. I said I have a feeling you're hard at work on it as I was speaking.
Yeah, we're doing it. When the market is moving as much as it is the last half of the day, I do try to maybe give it an extra minute, especially if it's literally moving in real time. But obviously part of that idea, the whole tool there is that, you don't have to worry about the exact moment. You can just pull up the tool, even if you're doing it at 345 or 355 or 405 for that matter, because we can trade it after hours.
Yeah, Nate, I'm looking for some trades that we can take here for the gap fill opportunity. I've got a couple, but I'll lean on you guys. I've been trying to build a scanner today that's effective for that gap fill approach that we've been doing here. Obviously, we did it on Eli Lilly, we did it on Nova, we did it on AMD, ANET, which did not work out, and Shopify, which did not work out. We had a couple other winners. Can't really remember them, but
good problem to have. Can't remember all your winners.
Yeah. So I'm trying to build a code for it because I've been manually tracking them myself. So I'm curious for all of our fellow stock trading nerds here in the chat, if anyone has something handy. Essentially what I'm looking for, Nate, is a scanner just to show me stocks that have gapped down 3% or more at least 1 point over the last 3 weeks. And then we can just at least monitor it from there. I built one in StockFetcher, but every time I do it, it returns the entire S&P 500. So,
well, there you go.
Far.
So, guys, just go to
just
any
trade the
stock.
Just trade them all.
Just trade them all. I mean, there are a couple valid entries on here from it. Of course, I got to like the setup as well as the technical pattern here. But
I really liked IBM. I mean, it's an old gap, but it broke through like the high, like gap down, made a little high, and then broke past it. So we actually did that one this morning on IBM, really and it's been trucking along, kind of grinding up all day. That was up a monster 11% already.
INTC, which is Intel, to the downside is setting up a gap, which we could do today. But it's such a news-heavy stock, which obviously that's why the gap existed. I'd just be afraid to be on the wrong side. SMCI is really close. It almost, I mean, if it closes above 48 today, that's an opportunity, but it's retraced since then. So again, a scanner would be nice.
Yeah. Okay. We'll have to work on that for sure.
Brandon says Roger has a scanner. Maybe I'll ask Roger.
Yeah, he does have that gap concept. So maybe that's one that we could do.
Yeah. In other news, for my alternative investment picks, Nate.
Oh, here we go. The alternative investments.
I don't know if you've noticed, but my Danny Dimes investment picks came in the mail today. So these are my ride or die. Colts win the Super Bowl. These puppies go up, I don't know, 3, 4, 5x. I like sports cards and stuff. I'm a dork. That's my current gamble. Odds of the Colts winning the Super Bowl? I don't know. We can ask the chat.
Well, we can tell. I mean, one thing you say, Graham always saying he's aggressive. He's high risk aggressive. Well, when you're betting your future on Danny Jones, then that is a level of aggressive that is hard to overstate.
Yeah. It's a short squeeze for sure, but we also have a
short squeeze.
There are only a few letters difference between speculation and hallucination.
Yeah. There you go. There you go. Pretty slim. James says pretty slim. All right, let's keep scanning here. Sorry, guys, we're not sharing our charts yet because I don't think we've settled in.
How's my Beanie Baby collection? I should get one of those going. Actually, my mother-in-law, funny enough, way too much information, definitely has one, and I definitely went through like all 700 of them to price them out individually. And I think the best one she had was worth about $7.
Nate, did you mean to post a trade in HQ for O&O with a September 26th expiration?
Oh, probably not. Probably not, Dave.
All right, let me get these tickers going. IBM, INTC, SMCI.
That should read September 23rd. Thank you, Dave.
Yep.
Don't worry, I haven't taken the trade yet. We're still waiting for the prices. We are going to get that out here in about 2 minutes. Okay.
Wow, AMAT was a recent gap filler, and holy moly.
Which one?
AMAT, AMAT.
Oh, yeah. Oh, AMAT. Yeah, I saw that because it popped
Ed
up.
Bath and Body Works. Yeah, I need a good scanner for this so we can dial these up easier. I tried to use ChatGPT, which is normally pretty helpful in at least laying the groundwork, but it was no help today.
All right, let me just take a look at a couple other ones from our previous list. Wow, IWM is, by the way, cranking back up. It was really sluggish, really behind the rest of the market today, and it's now up, beating the SPY and the QQQ.
Love it.
So that
Record Ralph says Graham should get Orly to act accordingly.
I will do my best.
Actually,
I think AutoZone has earnings tomorrow. Sister, or
yeah, it does.
Whatever you want to call it.
It does, and it was looking great actually this morning, and kind of sold back off as well. Graham,
Lulu.
if you,
now this is a crazy one. Lulu is forming a gap fill.
Well, speaking of just monster gaps, we're not there yet, but Nike got below 69.70 or whatever that is. That's a monster as well.
Yeah, Nike has a little ways to get there.
Yeah, a little ways. But Nike is a stock that I wouldn't mind being short, I have to say.
Yeah. And I apologize, I have a little sniffle right now. Just getting over a little weekend bug.
Well, Graham, while you are still kind of scanning around looking for stuff, let me give you one that's not a gap fill. Well, at least not yet. But we talked about on our watch list earlier. So let me go ahead and share one with you. We'll keep looking around in the meantime. But this is Disney. Speaking of stocks, I wouldn't mind being short. Disney's on that list. Nike, Disney, never really going to bother me too much being short, even as bullish as I am. You can see here, if you just drew a simple trend line here on this correction, we're breaking through that. Got a little, defending of that area. And so this is one that I think you probably, from a technical standpoint, would probably want to wait and see it close like this week below 111 is probably the higher conviction trade. So maybe just put this one on your watch list and don't trade it right now. But I'll just give you a little bit of a front run trade on this, and we can actually use this gap. We can use this 106 level as a target here just to show you the ROI potential here. If you shorted this and tried to kind of front run and move lower into the 106 range, this is a daily chart. So if you go to the weekly chart, you can kind of see how clear this gap is on the weekly chart after that monster earnings and then run. And now we're kind of back in. And obviously Disney's an ugly chart just in general. So I think if you just took the general top range, the general bottom range, you'd want to be a seller up anywhere above 120, 115. And frankly, you'd probably want to be a buyer, 80, $85 and trade it back right into this 105 range. It's kind of the center point of the chart. But basically, the ideal technical trade would probably be to see if we get another bearish week here, show some momentum below 111, and then trade it down. I'll just give you a cheap front-runny type of trade here. Again, just real quick, on the weekly chart, you can see it's probably going to take 3, 4, 5 weeks of slower move like this one here to make that move. Or obviously, you could see some really big breakdowns like this. But on the option side, we always want to give it more time, not less time, right? We think, hey, that's 4 normal weeks. We probably want to trade it like 6 weeks out. Give it more time Don't put yourself in a position where you were right, but you didn't give it enough time as often as you can. Sometimes you can't avoid that, but as often as you can, try to avoid that situation. And so if we want to do that, we'd go out on Disney here and we give it 6-7 weeks. Let's see what we get to on the monthlies. Okay, 39. So there you go, about 6.5 weeks or 5.5 weeks there. And on the put side, if you want to trade this down into the 106, 107 area, you should be able to get in for about 20 cents. So, you're talking about a 400% ROI sort of trade here if you try to front run this. Now, if you wait, which would probably be the better high confirmation trade, and you get a close down here at 110 or 109.50, you can make the exact same trade. The difference is instead of 400%, you might get 180% or you might get 200%. So just put a contract or two on now, and then if we get confirmation, maybe we even add to the position. So just to give you one idea here on Disney, this will be the 106, 107. We're trading it basically to get all the way down to this May high here after earnings. Okay. Let me go ahead and pop that one in the chat if you like it. Yes, we did just send overnight options. So you should now see that posted within a second if it's not posted right now. Let me give you this one. We don't have Disney earnings, do we?
No, I don't think this week.
Okay.
But let me check. No. I think the big one this week is Casco and Micron.
Mm-hmm.
All right. Got a few for us to look at. You just let me know when.
All right. I'm just going to throw a debit here. It's just actually popped a little bit, but we'll try to get this for about 20 cents. If you can get in for 20 cents, that's going to give you that 400% ROI. It's popping a little bit, but just be patient with this one. Again, this is just a stock. I'm the little guys. I'm going to throw less than $100 on this. So we're not talking about anything. Well, $100 at 20 cents. We're not talking about anything crazy here. But just a stock that I really don't mind being short on. I don't think it's a strong stock. It's not one that I'm like trying to fight an aggressive trend. And so I don't mind kind of front running a potential downside move here a little bit on Disney. All right, go ahead, Graham.
All right, cool. I'll go ahead and take the screen share from here. Share screen. All right, should be able to see it. Should be able to see it now. Got Disney up there. Let me go ahead and post this in the chat. This was a list I came up with. Nate, that IBM one, and if you want to repost those options, that would be great. That one looks really, really good.
Let me see.
This is textbook right here.
Dave, is our chat still open from this morning? Can I just go grab it? Well, I guess I can grab it from the trade sheet. Never mind.
Yeah, from the trade sheet.
No,
So
but
Friday,
I can grab it right here if you want. I have it. You're talking about the two from this morning?
Just the IBM one.
I got it.
Thank you. Thank you very much.
Yeah, that's a textbook gap fill there. 281 target. A couple others here that I did notice.
Wait, 281. It was 280.
What's that?
This morning? The one we took this morning?
Yeah.
IBM is 280 is the gap there.
What's
yeah, he said 281. So I'll just double check.
Oh no, I was saying the gap fill here too. 281.
Okay, so sorry.
At the price. Underlying price, 281.
I'll shut up.
It's all good. It's a Monday, All right. All righty. Where did my next one go? Oh, SMCI here. I mean, as you can see, this one's a potential setup. We would really want to see it close above 48.10. Let me get the high on that day. It's actually 48.13. So let me go ahead and do this. FC need close above 48.13. So we're not going to trade that one yet. Now, keep in mind, I did say I'm working on getting a scanner here for us. I don't have one yet, but if you guys want, I will try to get this built out for Thursday morning, Nate, unless I'm forgetting anything here. I'd love to go do a full gap training on Thursday morning in the opening playbook and walk through a scanner as well, assuming I can get one built in time. Lulu, same sort of thing, setting up a gap fill here, but it needs a break above 176.18 or a close above 176.18. So that's on the watch list. Let me keep going. SMPS. I think this one was already in a gap fill. Let me go look. Oh yeah, look at this one, Nate.
Oh, wow.
Synopsis. What do you think
Oh
about
my
that
gosh.
one?
There's a fat gap for you.
Yeah, so we're going to close above the 200-day moving average. You can see here, make a gap down on earnings, right? Big drop. What is that? $200 on a $600 stock? That's a 33% drop. Next day, entered the gap fill range. From there, it's up about what, $100. That's 20% on the stock. Remember, we talk about upside potential being such a larger percentage than downside because the stock fell this much. Now, to get back to all-time highs isn't a 33% increase. It's like a 50% increase for this stock. So SNPS is one that I really like right now. Obviously, we like the tech sector. I like this one right now just because it looks like something happened, overreaction to earnings. Now it's looking to be a little bit underpriced in the market. Let me go ahead and pull up the options here on SNPS, and I'm going to go a little bit crazy here. As you guys know, I like to do my more aggressive plays. So I'll give you one for this month that's going to be aggressive. And then I'll give you one for next month expiration. So again, our gap fill here, if you want to play it safe, you're looking at 583. If you want to play the true gap fill, we're looking at about 600. So I'm going to put down here 600 target SNPS, and I'm going to type up the options now. I'm going to put this whole thing together. All righty. SNPS is our ticker. I'm going to be using the October 17th expiration for the more aggressive one. That's going to be our full lotto board play, if you will. And then I'll use the next month, November expiration for the less aggressive one. Still out of the money, still going for a big old profit here. These are up there with our more aggressive plays. So keep that in mind here. I saw we had someone complaining this morning about not having enough winners. Unfortunately, with trading with me, you're not going to probably win 90% of your trades. But as you'll see here, this SNPS one that I'm going to type up right now has a payout potential of about 1,000% if it works. And I'm going to show you on the chart how it's not even that crazy. So we're buying the 590 strike call of 17th of October, selling the 600 strike call. This is currently debit of 80 cents. So you buy one contract that's $80. The max ROI, max selling point is $1,000 here. My ears are popping right now, so I keep having to unplug, plug my nose. So forgive me for that. But we're looking at October 17th. Look at my crosshairs here. Look at the price. That is a gap fill. Full gap fill is what we're betting on by over the next month, which, as you can see, based on the current rebounding trajectory, that would be a slowing trajectory. If it keeps up at this trajectory, it would be there in about a week or two. So I really like this bet. It is aggressive. Good chance it won't work out. We might have a 50% chance of it working out here. But if we're right, we're talking about, and I'll give you an exact number here, 1,150% ROI on SNPS. So again, there's a reason I call it a lotto pick, or put it on the lotto board. So I'm gonna do it here. You can see Thinkorswim will do the math for me. I'm risking $160 because I did two contracts to make $1,840. Well, I'm in my retirement account, so it rejected it. Let me go to my trading account. All right, there you go. Ready to fire away. Let it sit, and I can bump that up. I feel comfortable bumping that up into 90 cents, even $1. $1 would pay 900% ROI. But again, that's the beauty of trading these out of the money options. Of course, if you want to go safer, you can go closer to the money. It'll just make it easier to hit a profit target. Now, if you want a less aggressive one, still going for that full gap fill range, let me type that up for you here. I'm going to use the same strikes. I'm just going to bump it out a month. So we're still going to buy the 590 call. We're still going to sell the 600 call. Remember, this is still a high risk, high reward here. Let's go take a look at those options prices. So here we're going to give it a little bit more time. We're going to give it an extra month to get there. But if we're right, still a really great payout here on SNPS. Let me pull up the calculator again. Entering at $1.75. So $8.25 max profit. That's 471% payout. Oh, it just dropped to 150, so even better. Again, Thinkorswim does that nice calculation for me. I'll throw it out there, see if I get filled. Patrick says buy 2 and average them. Yeah, you definitely could. And this kind of goes right in line with our the price here on the next month out is moving pretty quick. So I'm just gonna make sure you use a limit order, guys. And then let me see what this one's at. Use a limit order because when you're looking at some of these options, these spreads, sometimes they can be a little bit wider bid ask, which again, we covered that misconception the other day, where as long as you're using a limit order, you should be a-okay. There's no stop limit here. Sorry, my ears are just popping crazy right now. See if I can get filled on this. Somebody said they got filled at 80 cents on S&PS. I'm going to see if I can get filled at all. Oh, it's moving quick.
Joanne, you'd see the overnight options trade in the overnight options members area if you're part of the program.
All right, well, I'll let that one. I'm sorry.
You'd need to join. Sorry, Greg. Go ahead.
You're good. I'll let that one sit there. The next one up.
Wow, that thing is ripping, Graham.
S&PSs.
Yeah.
We should have started the class. No, I should have found it earlier.
I mean, it's up $4 since we started.
Yeah. Well, that's a bummer. Let me see if I can get him for $1.
Hankford, you may need to go up to the top and select it to show all of the strikes. Sometimes it hides. It only shows a certain number of rows. There should be an option above the table in Thinkorswim to show all.
Yeah.
It might currently be set to like 16 or something like that.
All righty, cool. Next up here for a gap fill is Fortinet, which I love this stock actually. Beaten down on earnings. You can see kind of like S&PS, just a couple days later, entered that gap fill. Now it's been a little bit quieter since, right? We're not seeing as much strength, but we do see that Newton just flipped back positive. Momentum's now green on Fortinet. The gap fills under the 200-day moving average, which makes it easier for it to hit. So what I'm going to do here is I'm going to give this one a little more time. Actually, I might just the reason I was going to give it more time through November here, but we do have earnings in November. So maybe I'll take a look at the October expirations, but maybe not go for the full gap, maybe just a slight move, half gap fill here on Fortinet. Let me just check out the options pricing. It's really quick. And we'll take a look. So the gap fill price here is $96, roughly speaking, on Fortinet. 96. So if I go for a half gap, that would put us about 90 here. Let's see what the options look like. So still a really pretty good payout here. Fortinet gains a few bucks. $3, $4, $5? Sorry, $5 over the next month, which is about 5-6% on the stock. You make a little under 300%. So I'll type this one up for you guys. Again, ideally, I'd like to go out to November for this one, but they do have earnings early November. So I'm probably not going to do that. Let me just look at the later expiration, see what we got here. That one's not so good. I'm just going to stick. The volume's not there for that one. All right, we're going to stick it here. Fortinet, I'm going to buy the 17th of October $89 call. I'm going to sell the 90 call. Again, this is just going for a half gap, not even the full thing, just because we got a little conflict with earnings. Right now, it's at a 29-cent debit. We'll post this here in the chat. And if I'm going to let me show you the profit. 71 cents over 29 cents. 244% ROI potential here. It's a little cheaper now on Fortinet. I'm just going to grab 2 of those. Not trying to throw my whole account in on this one, but again, just setting up that gap fill, picking up steam now. Newton is positive, going for the half gap. So you see my crosshairs here. By October 17th, I just need Fortinet here above my crosshairs. If so, I make about 240% return on investment, which again, I don't think, looking at the slope, this trajectory, that would be too much to ask for Fortinet, especially if it just keeps continuing to close this gap. So those are my 2 main ones right now. The IWM or IBM one that you had earlier, Nate, looks really good. The Intel was the one. If you want to play one to the downside, I personally am not going to play this to the downside. There's just too much speculation around this company right now. So if you want to play to the downside, again, your gap fill target could be here at $25, roughly speaking. You can give it some time. You have all month. They don't have earnings till the 30th, so you can give it to the 17th to make that move. I'll look at the puts here in a second. But again, there's just a lot of speculation around this stock. Probably not a high conviction entry. But if you do take this month's expiration, look at this, Nate. It's a 566% ROI potential.
There you go. Well, I certainly would expect you to win 90% of your trades, even at 566% ROI frame.
Definitely speaking. Yeah. So anyways, if you want to, I'll just type this up for fun. I'll make it a bonus speculative play. But again, this is one that is going to be high risk, high reward, just like most of these are, where you don't need to win 90% of the time. You need to win less than 50% of the time, a lot less than 50%. You can be really good. But let me just type this up for you guys. But again, this one to the downside, I'm not as excited about, just because there's a lot of speculation.
Yeah, I mean, I talked about earlier. A lot of people, I think, out there are wanting to have some downside exposure right now because everything just feels like a melt up and it's so high. And I think there's definitely two sides to that coin. You know, having a couple plays that are outsized risk reward, I think makes sense. You just have to be careful, like not burning up hedge money as the market just rips higher and higher. And then you look back over a month, you know, now it's October 22nd. You think, oh my goodness, I can't believe the market is 8% higher than it was. This is crazy. And you feel like you didn't take full advantage because the whole time you were nervous about, you know, the market being overbought and therefore you're hedging and selling and not taking full advantage. So I think definitely two sides of that coin. We'll talk about two-way options, I'm sure, at some point here, which is like the way that I like to kind of have best of both worlds. But something like Intel that's going to be news driven, that could be very volatile. I actually don't mind as like a super high end risk reward trade that just gives you a little bit of a hedge if things do get ugly or something comes out.
Yeah, definitely. In other news, look at Apple. It's almost back to all-time highs. This is one that we pounded the tables on a good bit.
Oh, I know.
This one's similar to Google. I didn't put as much exposure as I should have, but it's all right. You know, we'll have plenty of opportunities. But something cool here, Nate. Apex back to back to back. Just hit the target today on the Apex indicator.
Nice.
For the third time in a row. So hopefully you guys were able to make some money on that. I know that's one that we've been trading very frequently here in the opening playbook and with the Apex indicator as well. So super cool to see that.
Yeah. Yeah, Apple is one. I mean, I think that we probably one that we caught more flack on than most picks that we have. I know I talked about on that Market Beat interview, and the comment section did not like my pick on Apple, but it's up like 25% since then. And just what we talked about this morning, one of those stocks that as long as the earnings continue to be phenomenal, and the stock is one of the giants in the world, it's probably going to come back and just be a pretty reliable stock to hit all-time highs. And so we might be about a day or so away from that at this point.
Yeah. Apex red candles mean to get out. No, that just means it's a down week. So this is a weekly chart. Green is up weeks. Red is down weeks. Blue, you can't see if it's up or down, but you would know that this is a bullish pattern, bullish breakout. So it would be a green candle, just highlighting blue as our entry signal. And we got some questions on targets for those gap fills. Guys, remember, we can do another training on using targets, but remember the target calculators in the opening playbook members portal. So everybody's going to have different preferences. Something that's really cool is like with these lotto picks, like that SNPS one, if you wanted to set like a 50% target and SNPS has just a half decent day tomorrow, like there's a very realistic chance it'll hit that target tomorrow. That's what's cool about some of these cheaper options. But again, that's 1,000% payout, max payout. That's what I'm going for. That's my preference, is to go shoot for the moon, just like we did on CLSK. Let's check in on that one. I know it's almost all the way in the money now. If CLSK here gains 24 cents, we gain 1,000% return on investment on this. But of course, you could have used targets too along the way. You could have done 100% target, 200%, 300, 400, 500%. So on and so forth, but that's up for everyone's preference. That's why we have that calculator there in the members portal. Like I said from the start, I'm a high risk, high reward guy, so I like to go for the full thing. Nate, on the other hand, is a high win rate kind of guy, and he likes to use those targets. So,
yep. And yes, some people asked about those trades from opening and closing playbook. Obviously, closing playbook, we kind of jump around, we move fairly quickly, but we do post those trades in that trade sheet there. So if you're in the $1 membership, you can go through and grab all those, and then go back later and check and make sure you have the right trades, all that good stuff.
Yep. With that said, we did just take a trade last week on Oracle, and if you saw in Telegram, I posted it was a nail biter, Nate, but it ended up pulling away. We did about 120% on Oracle. We only needed Oracle to gain a couple bucks. It was less than 1% to make that 122% return on investment. We are, a little teaser, trading Oracle again this week.
Oh, nice.
And this week, the math ran out that we only needed Oracle to gain about 0.8% to make 120% return on investment. So Oracle was up 6% today. So obviously, more than, quite a bit more than 0.8%. But the beautiful thing is, with these options that we're using, we're just looking at really strong stocks that tend to go higher, tend to drift higher. Most of the time, we need a 0.5%, maybe 0.75% move or more for us to double our money. Now, you can't do that with normal call options. You guys probably know that by now. There's only one way that I know to do it, and I'm going to walk you through it here in this class that we're about to pull up next, and hopefully you can get in on the action here with us. Again, the Oracle one last week was fun. It's a bit of a nail biter. I personally like it, Nate, when they get way in the money and I have no doubts on Friday, and I don't even have to look at it. And so far, this Oracle one's looking really, really good.
Well, yeah, I mean, I certainly prefer that as well. But I will say, I think one of the unsung heroes of trading this way is exactly what happened with Oracle last week, is that you still have that line in the sand, even if it's working against you and it looks ugly and a trade is rough, because you're requiring so little out of the stock. It drops 2 or 3% in the first half of the week, and all it does is kind of rebound to break even, like you said, maybe plus 0.02%. That's actually a full win. It's not a small win. It's not a partial win. It's not a break even. It's actually a full 100+% ROI by trading that way, versus the call option. If you bought a call option on Oracle for that week early in the week, and then it barely climbed its way back up, you would have lost money because it didn't overcome all of the expected move in the time decay. So I really think that's actually, as much as I agree, you'd love one just to take off, and I think a lot of times that's exactly how they play, just like that Apex chart you just showed on Apple. It just kind of grinds higher and higher, and you're in good shape. One of the benefits is actually the opposite too. When you're down on a trade, you still have a decent probability that things are going to be able to come back. All it has to do is just barely crawl over that line in the sand, and you can make a full profit. So again, just one of the kind of the sneaky benefits of trading that way.
Yeah, definitely. So we'll go ahead and pull that up for you now. Get you rocking and rolling with that. It's what I like to call the dollar options, and the reason is, kind of like you guys probably just experienced there on the S&PS trade, is that typically our entries are about $1 per contract. Sometimes they're more, sometimes they're less. But always going for right around 100% return on investment from just a small move in the stock.
Again, you guys know the drill. Profits, performance, not typical. We're not going to guarantee any future earnings, because of course you could lose money on any trade that we talk about. But every single trade here is based on real trades sent out in real time. This is not a back test, it's not paper money. The average return here, winners and losers, 32% per trade in 4%. Guys, that's winners and losers. That's that average return we were talking about. 66% win, and there's my favorite number, an average win of 93%, even though most of these stocks barely move. So obviously can't guarantee specific future results. There's always a high degree of risk. If you want to go through, just go to Prosperity Pub and you can read all of that. So welcome. If you guys don't know me, I'm sure you do. I'm Nate Tucci. I'm the publisher here at Prosperity Pub. And when most folks are paying, $500,000 or even more to trade popular stocks like Apple, Nvidia, or Google, one Florida-based trader discovered a new way to tap into what could be some of the most cheap options in the market that you can take advantage of. Trades costing right around $1, right around a good George Washington there to get in. And with this unique trading method, he's been able to watch as these trades double in just a very short move each and every week. In fact, over the last 18 months, he's already done it 58 times, including multiple doubles on some of the stocks I just mentioned, like this dollar trade on Apple, which cost $1.24 to get in and paid 101% ROI by the end of the week.